This is Rod Kusanen, Spooman for Risk for Tuesday, November 16th, 2010, all times on the Charter Central Standard Time. This is our second video today where we're now focusing our attention on the use of our retracement filter. We're going to be showing you two sets of charts, one that uses our filter and one that does not. The filter basically says, don't take a trade if the signal is too close to a retracement line. For example, if the trade signal was to occur within 8 ticks of a retracement line, then the trade cannot be taken. So in the first chart, that filter is turned off. So you see, while we have a nice buy signal here, we have another one here that is very close to this retracement line. That's risky. Over here we have another trade, but it's under the retracement line, and so that would be okay. In this chart, you can see where both of those two trades are okay, but the middle trade that was over here doesn't exist. Now here's another example. We see we have a trade right in here, but very close to this retracement line. So if we turn the filter on, the trade doesn't exist. Let's look at another example. Now here we have a host of various trades. Here, there's one up here, two here, here, as well as here. Now we have retracements right in here. And let's look at the chart where we're filtering those trades. In this case, we only find one set of trades right in here. The ones in here do not exist, nor in here. Now, you can't really see it, but the reason for a trade missing is because there was a condition that produced a very brief retracement line, and it's really almost too small to see. So here the reason is obvious. Over here it's not, neither is it obvious right in here. But the conditions that we set up for filtering the trade were in fact true at that time. So the trade wasn't pulled. Now here toward the end of the day, again, we have a list of trades here, 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 and here, but with the filter turned on, we have only one trade. So the conclusion is that trading with the filter on will substantially reduce the number of trades, but also reduce the risk that may be involved in taking a trade at an inconvenient time. So here we have 22 trades with the filter off, but only 4 trades with the filter on. Now, one final note about this chart. This is also the trend setting. We're using the trend setting, and the trend trade or the trend setting works under the premise that once a trend is established, we look for very specific conditions on the premium to get us into the trade. And here the trend was up, and so we had a few instances where we had entries under those conditions. When the trend was down, of course, we didn't take those trades. Here we have a few trades, even though the intermediate trend was down, the overall trend was up. Okay, and then last but not least, earlier in the day, again, the trend was up right in there briefly, and then finally the market sold off. All right, so that's the concept, and of course, whether a trader would choose to use this feature of our strategy or not is discretionary. So that accomplishes the purpose of this video. Come visit us at rsksys.com and ask for a demo.